Hello and welcome to another episode of the Power Law Investor. Today is the 2nd of December 2025, a Tuesday. And as I'm making this video, Bitcoin's at 86.5K, ETH is around 2.8K, BitTensor trading above 250, and Kaspa around 5.2 cents. And in today's video, I'm going to sort of give you a state of the market where I see things heading. Um, as everyone says, or as predictions are hard, especially about the future. But I will try and use the mathematics that we've developed through the PAI system and index to try and understand where we might be going, what is the likelihood or probabilities, and how I am going to try and play this going forward. And of course, this is not financial advice, so do your own research. But I do think by looking at the way I am structuring things, it'll give you some ideas on how you might want to manage your risk and your positions going forward. So let's get to it. As a brief summary, the PAI system is something I've developed that ranges from 0 to 1. The closer it is to 0, the better it is in terms of buying opportunities. And the closer it is to 1, the more cautious we should be in terms of where the price is. So it's generally an overbought sort of situation. And each of these, this is causal and backward looking, meaning that it only uses the data that it has up to that particular point. So for example, here on 2025, April 8th, the PAI of 0.389 only looks at the data before that point onwards, right? So I'm not looking at the future and then adjusting on what I think is a reasonable way to shape this value. It's just based on what's happened in the past. Every asset has a unique history, and the PAI looks at that history and learns as time goes on and becomes better at refining estimates. So, if we zoom in here for Bitcoin, we can see that we had PAI values in this particular run of about 0.389, right? And now we're at 0.387. Now you might look at the price difference and say, hey, why isn't the PAI not lower or PAI high lower now than before? Well, it dynamically adjusts to where we are, right? So it is learning, but it's also adapting to where we are given the price action that we've seen. So if you believed that uh, that Bitcoin was going to continue to appreciate and that the 4 year cycle is over and we think that we're still in a bull regime, this is only a drop, then this would be a good buying opportunity, right? Because you can see in this particular bull run, let me zoom out here a little bit and then we'll zoom in again. If you look over here, typically when the color has been this blue, I'll flip this on and off so you can see, those have been good buying opportunities, right? Of course, here's before the bull run started, so overall we were still going down, so these weren't great buying opportunities then. But after that, around here, for example, we had 0.396. I'll again flip it on and off. As you can see, it caught the bottom over here, it caught the bottom over here, and now the question is, hey, is this a bottom over here? Or is this a change, right? So the question we're trying to answer is, are we in this part of the cycle when we're going up? Or are we in this point of the cycle when we're going down and the PAI is saying, hey, this is a good price, but good price is going to keep on going down. So good price relative to what? And that's when we have to make this assessment of whether we're in a bull regime or in a bear regime, right? And it's not easy to do that. If you believe in the 4 year cycle as we've had in the past, then you would think, hey, the top is already in, or maybe it's going to come in December. That would have price would have to increase quite dramatically to hit an all-time high. Or maybe we already hit that in October at around 126, and now we're on the downward side of things. Now, in fairness, my initial assessment was that we would hit a price of about 150, but that hasn't happened as yet. And for me, it's increasingly unlikely. And the reason I want to explain that to you guys is by looking at the 350-day moving average. Now, the 350-day moving average or the 50-week moving average here on the weekly uh, is basically sort of a threshold beneath which, looking back historically, things have changed quite dramatically, right? And so now you can see the 50-week moving average or 350-day moving average is around 102 right now, right? So typically in the past, this has marked a bear regime. So over here we can see that can see that over here that we're dropping down. Over here, we came back rather quickly, but this was the COVID pandemic. So different things going on. If you look back further than that, you can also see, hey, here we went down, bear market for quite a bit. So once we go down, we tend to continually go down. Uh, but that's also validated by the PAI system, and I want to kind of show you where we are on that, right? So the PAI system is again the values between 0 and 1, but I've also developed a way that it allows us to predict what we can see in the 30, 60, 90, 180, and 360 days in front, right? So given that I'm at a particular PAI level, call it 0.5, what is the range of values that I expect to touch in the next 30, 60, 90, 180, 360 days? And if we use that, typically we end up with this spread right over here, and it says, hey, we could go down or we could go up. And it's better than most other crypto analysts will tell you because it tells you the probability of going up, say to the 129, if the 60-day horizon is 27.4, and going down to the 66,000 level is 19.2. So you look at this and you'd say, hey, there's a good chance that we're going to go more up than down. But this is for the overall history, right? If we take that history and we split it into two parts, one part when we're below the 350-day moving average and one part when we're above the 50-day moving average, and call them when we're below the 350-day moving average, for Bitcoin this is, we call it the bear regime. And when we're above, we call it the bull regime, right? And you can see just visually without getting into the details how much more weight there is on the downside when we're in the bear regime versus when we're in the bull regime, right? Let me just expand this up so it might be a little clearer. You see the mass of probability is so different between the two. And what that tells me, and also the massive probability going upwards, right? So basically, it is a much higher probability of going down. This is not me imagining these things. This is what has happened in the past, right? And I can't predict the future, but I can look at the past and then based on that try and make the best assessments of what I think the future is going to be like, assuming it is like the past, right? And when I look at it in this way, I see, hey, the mass of probabilities is definitely aimed at the downward section, right? And as I mentioned in one of my past videos, if you look at, let's say, the 90-day horizon, the probability that we hit 66K is 35%, but the probability of we hit 129K is 20%, right? So you're comparing 20% versus 34%. The balance of probabilities is towards the downside. And for me, this was when I saw this, it made it very quantitatively aware of the fact that I wanted to reduce my crypto exposure because I think the risks based on this, what we've seen mathematically derived, are to the downside rather than the upside. Now, I don't want this to happen. When I saw these results, I didn't like it because I wanted the price of Bitcoin to go up and the price of the different alts, etc., to some of which that I own, to also go up. But we have to accept the data the way that it is, and we have to accept the price action the way that it is. So with this lens in mind, we know that the balance of probabilities is towards the downside. But there is some good news also, which I talked about last time too. Let me reiterate that. Is yes, there's a very high probability that we're going to hit the 0.3. The probability, now this is a PAI of 0.3, which corresponds to today's price of 66K or so, and it says the probability is 100% in 360 days, meaning that whenever we've gone down below the 350-day moving average and we're at a PAI of 0.379 or approximately within this zone, we've always gone down and hit the 0.3 PAI in 360 days. That's what it's saying, right? Now, is this time different? Maybe. You know, do I want it to hit that level? I don't have much control over it, but this is what's always happened in the past. And you can see that happens over the course of a year. But also on the other side, you notice that it does start going higher too, right? What this means is that not only in the upcoming 360 days or upcoming year, it's going to go down, but then it will also go up, or it may go up and then go down, right? It's not saying what the path there is, but typically the weight of the path is downwards, and you can see that there's a much higher chance, looking at the 180 day, for example, there's a 71% chance that we're going to hit the 66, the PAI at zero point 0.3 or so. But then it's also saying, hey, we may also, even in this bear market, there's a 36% chance that we may go up there. But you can see if we extend our time horizon to a year's time, there's a good probability that we're going to hit higher prices also. So what does this mean to me? How do I interpret it? To me, based on what has happened in the past, there's a good chance that we're going to be visiting lower PAI prices. Okay, lower PAIs resulting in lower prices. Is that a guarantee? No. But when you look at these Brier scores, and the Brier scores that I want to show you here are sort of looking at how good in the past has this PAI system that I've developed, how good are the predictions that it makes. And the Brier score, you're looking at 360 days, is below 0.1, right? Below 0.1 means you're doing better than more sports betting markets, for example, like NFL closing lines, European soccer, etc. So it doesn't mean it always gets it right, but it means it's pretty darn good, right? And so when I look at that it has done a really good job of predicting this in the past, and then I look at this, I think, hey, I need to take some risk off the table because I think prices are going to go down. And when prices are going to go down, I plan on buying more, buying in. And I have a high degree of confidence in those prices because I have developed this PAI system, right? So if you're going to get these prices over here, let's say 0.25, for example, right? Those would correspond today around 0.25 maybe to a value of between, say, in the 50s, 60s or so, something like that. Again, it's not an exact number that we'd get, but it does say that we have a pretty good probability of that happening. In fact, this value around 66, it says the probability is near 100%. Now, these are not going to be exact because the PAI dynamically adopts, right? As the price value changes, it's constantly adjusting it. But it gives you a rough region that we should expect prices based on this, maybe in the 65, 70 range or so. Maybe we get that, maybe we don't get that. But the way that I'm going to play this is that I can just rely on the 350-day moving average. If the price continues below the 350-day moving average, I'll be mostly out of the market or have a certain chunk that's going to be out of the market. That's going to be waiting for those prices around 65, 70, 60, somewhere in that region, right? And then I'll start DCAing in. If the price action changes, which I would love to do that, and the price shoots above the 350-day moving average or the 50-week moving average, which is around 102 right now, I'm happy to jump in, right? So am I going to miss out on the gains from 86 to 102? Yes. But I'm okay with that. It's important for me to preserve my capital and run this game in a probability weighted way going forward so that I have the highest chance of protecting my capital, right? So that gives you guys an overall picture that I'm mostly out until prices drop down lower, which I think is the most likely scenario. But if we have a quick reversal, like we did over here around COVID, then I know what my index point to jump in is. And it's when we cross the 350-day moving average and shift into the into the bull regime. And then the probability of going upwards is much higher. Now, again, I know a lot of you will be saying, hey, but this time the cycle is different. We have institutions coming in, the 4-year cycle is dead. I think those are all very valid points, right? But I don't know. And because I don't know, I'd much rather play it cautious. So if it goes lower, I have a plan. If it goes higher, I have a plan. If it stays in the middle, I'm just going to hang out and stay mostly out of the market, right? What does that mean in terms of altcoins? Now, when I started this channel, I was talking a lot about Kaspa over here. This is Fartcoin over here, but let's move on to Kaspa because that's what a lot of my subscribers are interested in. What does that mean, right? The PAI has done a great job of calling the bottoms as you can see, it's becoming more and it's becoming better and better at calling the bottom. So it was right, and it started calling the bottoms at around 4.4, and this is the PAI value where it's really minimal, right? Around 4.5 cents, and then it sort of stopped and called it all the way to about 3.8 cents or so, right? You can see, and this is again causal data. So these are the values that I was generating in real time, and I shared that in my videos, and I hope some of you were able to take advantage of it. Some of us were lucky enough to get it when the price spiked way down at 1 cent or so. Great. Uh, but with what we know is happening to Bitcoin, does the PAI values that are being generated saying, hey, there's a bottom of about 0.3 or about 3.5 cents or so, are those still valid, right? And the answer is we just don't have a lot of data, right? We don't have that degree of confidence in here because we're looking at only 1100 days of data or so. There used to be a little thing over here that would say how confident we were in the data. It's sort of disappeared, but you get the idea that we've basically been looking at Kaspa only when we've been having Bitcoin going up. And when we're shifting to a bear regime, it is not going to be a wise decision to expect that Kaspa and the altcoin market as a whole are going to operate independently of what's happening to Bitcoin. It could happen, but generally we've seen that altcoins are oscillators around what's happening with Bitcoin, right? So they amplify what's happening with Bitcoin. Bitcoin's taking off, the altcoins take off more. And when the Bitcoin drops down, the altcoins drop down more. So they're high beta play, as you'd say in the finance parlance. So that being said, I think it's really important to be cautious. And the way, if you really do want to play that, is it's going to be hard to catch the exact bottom. I don't know how much lower it goes. But as I discussed in one of my previous videos, if you look at the 35-day moving average for Kaspa, that has done a pretty good job of preserving the positions, right? So basically, when the price of Kaspa goes over the 35-day moving average, you buy. When it drops below the 35-day moving average, you sell. And what that has helped us do in the past, or those people who were able to do that, is that allows you to have most of the gains, but also avoid most of the losses. Now, because Caspa's been in a bear market or has been downwards since about September or August of last year, it has mostly resulted in limiting the losses that you have as a Caspa holder. Right? It does involve extensive tradings. It's not perfect, but if you are going to play the Caspa game and you are very convinced about it, and you don't want to try and catch the bottom, this sort of momentum based approach using the simple 35-day moving average is a reasonable way. It has worked in the past for preserving the value of your Caspa. So if you look at it now, the 35-day moving average is just around 5 cents. So we're actually above that. So when the price shot up above 5 cents, you would have bought. But now we're right at the border and we might go below. So in this case, you would sell your Caspa once it goes below this line, if it goes below that line. So you have a natural stop loss built in here, right? And so that's not the game that I'm playing, but I am telling you guys that this is the way, if you really did want to play with Caspa, this is one way to try and ride it in such a way that you can take advantage if prices suddenly shoot up, and it's independent of what happens in Bitcoin, but also on the downside, it somewhat protects you. Right? That being said, we don't have all that data, all that much data for Caspa, but the bottom, according to the PAI right now, is around 3.5 cents, right? So again, we may get prices around that. I don't know about the future, but we can only react to what we see. And right now, the price is around 5.2 cents. So the PAI system is giving you a good signal of buying it, but we may start heading down alwards, right? So I think tight stops would be the way to play this. Similarly, with Fartcoin, even less data. Right now, it's up back up to 32 cents after the PAI was calling the bottom all the way from around 26 cents to about 20 cents or so, right? So now that we've gone up, we're at 32 cents. If you're following this, it's allowed you to get in under a at a good price. But again, I would be very cautious about playing this and would use tight stops because we just don't know. And right now, the absolute zero value that this is predicting for Fartcoin is around 18 cents. Again, let me remind you that this will dynamically adjust. over time as the price action for Kaspa trends and or for Altcoin trends in different ways. Similarly, I had a lot of interest around BitTensor, and as you can see, the BitTensor it isn't as good as an opportunity as it was in April, but the PAI now has gone to around 0.238. And if you want to look at what the bottom for BitTensor might be like, it's probably a decent price around zero point 0.2. It's not quite bad right now. And we look at the cumulative graph, it's been basically below this point about 25% of the time. But if you wanted to buy even tightly in the bottom 10% of the band, that is between 0 and zero point 0.1 over here, so about 13% of the time or so, then you'd be looking at values of around 198 or lower. Again, I don't know whether we get it or not, but it does tell you relative to BitTensor's history, this is a good time to buy or not, right? And so you could wait until 198. If you get it, that could be great, but it's unlikely to go below 159. Again, we're only looking at bull regimes over here, so I think we have to keep that in mind. And so it is less than something that's very reliable right now, just because we're in a bear. We according to what's happening with Bitcoin, we are in the bear regime right now. So uh, I would have very small position sizes if that's what you want to do. And I would also have tight stop losses because if Bitcoin continues to go down, the alts will continue to bleed. So why take that risk, right? And so the way I would play these, and the way that I'm planning on playing these, is that I'll wait for Bitcoin to get above the 350-day moving average. And then I'll know that the upside for Bitcoin is there. And then I'll know the upside for the altcoins are there. And I don't have to catch the exact bottom. I'm happy with the middle 80%. I don't have to catch the bottom 10%, and I don't have to sell at the top 10%. Right? So capital preservation and consistent gains is the way to go. So that's kind of where we at. If there's one thing that I would take away from this video for you guys, is this over here, is that right now, since we're below the 350-day moving average, the risks are greater on the downside based on what's happened in the history. And so, life must be lived forward, but we understand it looking backwards in the past, right? And maybe this time is different. And if this time is different, I'm happy to give up some of my gains and wait until we hit the 350-day moving average if we do that. And if we do hit that sooner rather than later, then the bull market is back on. We're in the bull regime. The balance of probabilities shifts to going up. So I hope this is useful. There was a lot of information that I shared with you guys here. So please feel free to ask questions in the comments below. And do like and subscribe. And for more updates, sign up at powerlawinvestor.com. There'll be a lot more exclusive stuff coming there to your email. So if you'd like to sign up, that's the best way to get the latest data and figure out where things are. So see you on the next one. Cheers.